AIM-listed CleanTech Lithium is aiming to be a leading supplier of clean battery-grade lithium for the global energy market and the transition. It's pushing ahead with Direct Lithium Extraction, DLE technology, powered by renewable energy, enabling it to be a leading supplier of green lithium to the EV and battery manufacturing market. Gordon Stein is the Chief Financial Officer who joins us now. Gordon, welcome.
Thank you, Jeremy.
Great story. And in fact, you're in Chile as well, which is really, really good. I mean, it's a great area to be in. More on that in just a minute, but just give us a brief outline as to what it is you're doing with this DLE process and how you're moving towards bringing this to market.
Yeah, we've been working on DLE now for the last 3 or 4 years, and the original founder of the company has been doing it for longer than that. So DLE is a technology or a process that's been used in other industries for 30, 40 years. It's basically a process of extracting a product from a brine or whatever, and producing it in the market. So it's been used in the uranium industry, in pharmaceuticals and so on, but it's never needed to be applied in lithium before, because the supply was provided through other sources. You've got the hard rock mining in Australia. You know, take the rock out of the mine, put it on a ship to China, send it over there, 100% of it, and then 95% of it gets thrown away on day one, and then the 5% that's left, but you end up with about 1% of that. So horrible carbon footprint. And then the other alternative was evaporation ponds, largely in South America, where we are, and that's mile after mile of evaporation ponds, letting the sun evaporate, and it's hugely inefficient, big carbon footprint, depletion of water, so not environmentally friendly at all. But DLE is now, there's a space that's now opened up for DLE, because when you look at the lithium supply and demand curve on pretty much every analyst you're seeing, whether it's Goldman Sachs or Woodmac or Benchmark, they're all seeing a structural deficit in the supply of lithium as the market grows. Benchmark this morning announced in a report that they see a 30% growth this year in the demand for electric car batteries. So you do the maths there, if you get 30, that sort of demand, you see all of the curve from around about 26, 27, 28 starting to break. So somebody's got to fill the void. And DLE now is a process where you use what is effectively a resin to you pass the brine from your reservoirs through a resin. The resin absorbs the lithium onto the resin, and because of the molecule size, other products like calcium, magnesium, and so on, boron, are in the brine, miss. So you've effectively got the lithium purely captured. You capture about 80 to 90% of that, and you compare that with evaporation ponds, you get 30 to 40%. So immediately you've got, and by the way, you do this in 2 days, as opposed to evaporation ponds, anything between 1 year and 2 years. So you've got a process that's more efficient, it's more environmentally friendly, and what we've been doing is we've proven that it works at a lab scale level, independent verification. We've now got a pilot plant, and we've got the biggest pilot plant probably in Chile, probably in South America. We commissioned that over the course of the last 3-4 months. And that went live last week. So we're now proving that we can deliver, and that will, in the next 1-2 months, we'll be proving that we can produce clean battery-grade lithium. Okay,
so we get a better understanding now about the old methods of doing it and the DLE. What about the capital expenditure involved in doing it this new tech way, and the operational expenditure as well? How's that compared to the older ways of doing it?
It's a bit of mix and match, because you've got, for us, for example, we can buy modular plants. There's modular plants operating today in China, by companies who are operating there. There's 7 plants operated by one party, and there's other plants that are working. So, and some of there's a project being built in Argentina by Eramet at the moment. There's a project being built in the States using some of this Chinese technology, and there's other entities in the States that are looking at DLE as well. So, the capital costs we were estimating for our 20,000 tonne a year plant, round about for the actual processing kits, about $200 million. That sounds a lot of money, but when you do the maths, that would be repaid within 4 months from revenues, or 4 or 5 months when we're up and running. And then when you compare that to evaporation ponds with huge footprint, it's pretty capital intensive. And I think a key thing from DLE's point of view, it's much more, it's right at the bottom end of the cost curve. If you look at the cost base, a lot of companies now are shutting down production in China and in Australia, because the lithium price has come down and they can't sustain it at the current price. whereas we're right at the bottom end of the cost curve from independent studies, around about $4,000 a tonne, and the price today is $15,000 a tonne and heading upwards as well.
Let's take a look at the assets that you've got. I said at the top you're in Chile,
yeah,
which is a pretty good mining jurisdiction, as we all know. Explain more about the assets and the project that you're pushing ahead with.
We've got 4 projects in country, but 2 of them are our key projects. 2 of them are more exploration plays. And the 2 projects are both, we have 100% ownership of both of the projects. They're up in the high Andes, both about 4,300 metres. In fact, near both of them, there's nobody lives within 100 kilometres. We engage with the local communities as we go through the transport corridors. But so you've got 100% ownership of a basin in these areas. And we've got a large footprint there. And we've been working there on pretty active campaigns over the last 2 or 3 years. I don't think there's any company in Chile today that's done anything near what we've done in the last 2 or 3 years. We've had we're on a 3rd drilling campaign at Laguna Verde. That's our flagship asset. That's the most advanced, and that could be on production in late 26, early 27, with a fair wind. And actually we've got that, and we've got 1.8 million tonnes of resource, a JORC resource that we've announced on that. That's more than enough to sustain a 20 to 30 year life project at 20,000 tonnes a year. Just to give a context, 20,000 tonnes a year will support between 500,000 and 1 million car batteries, depending on the size of the battery and the power. So it's pretty material, and that's just our first project, Laguna Verde. We have another one, which is about a year and a half behind Francisco Basin, which we're not doing active work on at the moment, but we plan to kick that off again. So, and probably worth mentioning about Chile as well. Chile is a mining country, as you mentioned. A long history of mining, and good in terms of the regulatory processes and so on, very much mirrored on Australia and Canada processes. And Chile's got the biggest reserves of lithium in the world. The problem is it's been caught up and overtaken by Australia in terms of production. And Argentina's catching up fast. So, you know, I'll go into the announcement last night, which changes that. But I think Chile's a good place to be, and we're right at the forefront of the new activities in Chile.
Yeah, let's pick up on that point about the announcement last night from Chile about these salt flats. Exactly what it is, as they said, and how's that play into what you're trying to achieve?
Yeah, there was a lot of confusion last year because around about this time, was April last year, the president announced the new national lithium strategy, but the market kind of got it wrong. They were assuming about nationalisation. They were assuming that public-private partnership basically meant that the state would take over. That's absolutely not the case. What you've got is the two major salars in Chile, the Salar de Atacama, which is the biggest producing field in the world, and then you've got the Maracunga, which is ready to move forward into development. They're going to be strategic projects, and the government confirmed that last night. Other projects, there's going to be about 30% of the salars you could potentially use, about 70 or 80 salars, are going to be protected and not exploited. We're not in those areas. So we're in the area now where they can be exploited, and the government set out last night a clear timeline for the award of the operating contracts. The operating contracts under Chile regulations at the moment, you have to have an operating contract to exploit, extract and sell lithium. And we put our operating contracts in last September. We've now got a very clear path that from April through to July, we would expect from July we would get the tick in the box. And from our perspective, that was a big move forward last night. The government, you know, 6 ministers stood together in front of the TV cameras and made an announcement about how Chile is going to drive forward and use the opportunity to really unlock what they've got in a market which is open to the supply of lithium. And actually, because we're the first company to bring DLE to Chile through the pilot plant and in conversation with government, we're right at the forefront. So last night was great news for us.
So you got this pilot plant basically up and running, and you're producing what, lithium eluate, isn't it? I don't know what the significance of that is in other sorts of lithium, but where are you selling it to? What's the? I've said at the top you're going to be entering this market, which is going to help us toward this energy transition. So we know where you're targeting, but what is it? Who are you selling on to? What are they actually going to be doing?
Well, the pilot plant's got really two main objectives. One is we've decided we're going to use DLE, and we've proven it can work. We've now got to prove it can work at more of a scale. So the pilot plant is we've discussed whether it is a pilot plant or a demo plant. A demo plant is you've made your mind up, you're moving forward. This is about scaling up, and pilot plant is designed to produce up to 1 tonne a month a battery. That's a pretty chunky number. And what we're going to do with that lets you set the parameters for your we're doing a pre-feasibility study at the moment. That sets the parameters for the whole construction phase of the project. You know, what are you going to construct, how are you going to do it? So that provides that parameters. But more importantly, it provides product. You know, we're going to have battery-grade lithium, and a ton of it, or up to a ton of it. And what we're going to do with that, we're going to send it to suppliers. You've got your battery manufacturers, your car companies.
Mostly in America? Or
America, Far East. We've got 5 major household names under NDA. We have had for a while. We've had 2 of them been to site. They're watching. And we keep saying, not yet, not yet. We want to send you product so you can see what we can sell you, what we can give you. Let's talk about how you help us finance the development of this project. And we're not far away from that now. You know, we're producing eluate. Eluate, then eventually we send that, when we've got the concentrated lithium, we'll send that to America to a downstream process, which does it for many other companies. And they'll produce battery-grade lithium. And then it's a question of who wants to have a look at this. And you know, these companies that are out there, they see the structural deficit. They're all trying to secure supply.
Do you have a proprietary process, or is it an open process that anybody can use anywhere?
No, it's an open process. We've actually tested lots of different resins, because each resin or each brine is different. You know, I mean, both of our brines are different from Laguna Verde and Francisco Basin. So you need to find a resin that works best for your brine. We tested various ones, and we chose one company for our pilot plant in the last couple of months. We continue to test today with this eluate, this brine on the way to America for a further test with another company. So you continue to optimize your process, but the pilot plant allows us to do that. We can, you know, continue to evaluate what the best options are for us. But it's not proprietary to us. We're using proven technology that other companies are using, and technology that exists today. So when we buy the kit from wherever to put up, we can put it in modular, and you can build it up from there, whether it's 3,000 tonne a year to 20,000 tonne a year. So we're pretty close now to, within the next 6 months, we'll have product, and we'll have a PFS, pre-feasibility study, with the clear guidelines on how we're going to drive the project forward. The economics, the logistics, the environment, all of that is coming together at this moment. So
yeah. I know you're in a closed period at the moment, so you can't talk about the deep mechanics of the balance sheet and profit and loss. But if you can, as the Chief Financial Officer, can you indicate the strength of the company in terms of what you want to achieve and where you are?
Yeah, we've been well supported by the market over the course, I mean, since I joined 2.5 years ago. And we've done a number of raises. And actually, as we are today, we did a raise, £8.5 million. It was absolutely oversubscribed at the end of last year. Right. Which gives us firepower to see us through. And then we're planning to list on ASX within the next 6 to 8 weeks. Documentation is coming together nicely on that. And I think, you know, we're going through, you know, Easter will get in the way, but we'll list there. We'll probably do a small raise then. We have to as part of that process, but nothing material. And I think we can step forward. I mean, the key point for us is going to be around about the 3rd and 4th quarter this year, probably the 4th quarter, when we've got the product and we've got the pre-feasibility study out into the market, and a document we can share with people. And this will be a 1,000-page document of how we're going to drive this project forward, with a number of supporting independent studies covering all of that. And then we'll talk to strategic partners about who wants to come and work with us, whether it's offtake. And that's where you bring the project finance. You know, they'll bring banks with them. There's also export credit agencies. We've already had some offers from them. Send product to Germany is what we're hearing, because they want product. So we're in conversation with you know banks in Germany. So we're just stepping forward nicely, and we're just building up a nice story, and we'll drive forward on that.
Talking to a lot of chief executives, chief financial officers in this space, and there's a constant, obviously big demand for the product, but also for companies. China is looking to acquire a lot of assets around the world. Do you think this is something that ultimately, I mean, under the shareholder laws, you have to go to shareholders if you do get offers for the company. I mean, this is an area, do you think, that could be swamped by Chinese money?
Chinese are quite aggressive and in all manner of ways, but it's an open market. I mean, yes, we talk to Chinese companies. We're working with them in terms of provision of facilities and so on. But, you know, we're talking to companies in Europe. We're talking to companies in Germany and also in North America. In fact, we had an approach only today from an entity. So it'll really be how we think we can best move forward. Once we've got a product and we can get attention. The good thing is with the Inflation Reduction Act, Biden's Inflation Reduction Act in the States, billions of dollars available for companies like us. Chile's a free trade agreement country. We comply. So it would be natural for us to build some sort of relationship with an American company who wants supply, and then we can access the funds that exist there. Likewise, in Europe with the Critical Minerals Act, there are funds available also through the import-export credit agencies that allow us to drive a project forward. So in terms of raising the 300-400 million we're going to be raising for the project, actually it's not phasing the board, because we know if we've got the product, we can evidence that, they'll come.
Yeah. Let's bring up a share price chart. You said you're going to be listing on the ASX sometime in the next 2 or 3 months or so, 3 or 4 months
2 months,
or so. This is the London listed share, obviously, of CleanTech Lithium. Talk us through what's happening here, because from what you've said, I mean, you've cleared a number of rather important hurdles. You've got a system that's up and running in terms of pilot. You pretty much know where your market's going to be. You're selling into a very buoyant, well, certainly demand-led market. And the supply is just not there to satisfy that demand. What's happening with the share price?
Partly the AIM market and partly the lithium market is for those that know that the lithium market got to high levels in the late 2002 to 2022 and has fallen significantly since then, 80%. If you actually track our share price, we pretty much track the lithium price. I mean, there's ups and downs and so on, but when you actually do an average, we pretty much track the lithium price. So this is where we scratch our heads, because we've been valued technically at where the lithium price is today, which is somewhere between $12,000, $13,000, $14,000, $15,000 a ton. The reality is all of our economics and all of our projects are going to be done in 2 or 3 years' time at prices everybody, including everybody, all analysts are saying are going to grow into the $20,000 or $30,000 a ton. Our economics were done at $22,500 a ton. So I think we're in the right place. Our break-even is $7,000 a ton, all in tax, governments, royalties, operating costs. So if you can get anything above that, and the higher it goes, you're in a good place. So our share price is frustrating, partly because it's the AIM market and it's had a difficult time. That's partly the reason why we're going for ASX. It's a market there which really understands mining, probably better than London does. And you've got an investor base that's pretty savvy on mining, and a much more significant retail base that looks at the mining sector. And our major shareholder, Regal Funds out of Australia, 15% shareholder. They've been incredibly supportive over the years. They've been telling us get on ASX because you will get a re-rating. The market will understand what you're doing, and because of the pace of our development, they'll see the opportunity to see a kick. So we're pretty excited about that. It's a long process to get on there, but we're getting there. Yeah.
Well, look, wish you all the very best. It's been an interesting story.
Right.
Thanks for dropping by to give us an update. We look forward to hearing more as we see things happening.
Thanks, Jeremy.
Gordon, thanks so much indeed. That's Gordon Stein. He's the Chief Financial Officer of CleanTech Lithium.